Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm Brian Johnson. And before we get into the markets, Rich, you have been emailing me, and I've tried a couple of different ways to get back to you, and everything comes back undeliverable. I don't know why. Maybe it's getting through to you and it's still generating a or an undeliverable message. I'm not sure, but the question was a good one. Rich had this question. I hope you're watching this, Rich. The question was, do I need a PayPal account to sign up for the newsletter? The answer is no, 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 no. A lot of people don't like PayPal, or they don't have credit cards, or whatever the case is, so they do ask me that all the time. I have numerous people that don't use PayPal. They call me with a credit card, and we do a credit card transaction over the phone. I do not like you sending your credit card through the email, so please do not do that. Call me with it. Send me an email, send you my phone number, send me an email with your phone number, whatever. People pay with a personal check, they send bank checks, they do money orders, whatever. Doesn't make any difference to me. No, you do not have to have a PayPal account in order to sign up for the newsletter. And you can still do it on a monthly basis. That's just fine. All right, so sorry, man. I'm trying to get a hold of you. hopefully that got through to you. Okay, on to the markets. We've seen a little bit of volatility in the markets. We've seen pushes down. We've seen pushes up. Today, actually yesterday, was a push, kind of sideways most of the day, and then a big grind, literally to the upside, coming into the end of the day. Then today, big gap up, and it was a continuation of the grind we saw from yesterday. Just the slow, laborious move to the upside. And in the trading room today, I made mention at the end of the day to everybody, the bears are obviously still hanging around. Everything we had accomplished, or the bulls, I should say, not we, but everything the bulls had accomplished from about 2 a.m. was wiped out in about the last hour, hour and a half of the day today, as we came sweeping back down here. And you can kind of start to get a feel for the bigger overall picture here, and that is we are in kind of a downtrend, a little bit of a channel here, coming back into some moving average areas where we've stopped. Some indices above these, some indices in between them, as you can see in front of you here. Point is, we're still stuck, as we have been, in this big consolidation sideways. If I move to the next screen, which is the daily, you can see very clearly this huge consolidation. We're stuck between 11.5 and 10.7, really 10.6, quite honestly. But any moves back below 10.7 would be good enough for me. We still have to wait. It's just I really can't give you, I'll tell you this, I'm a little bit more bearish than I am bullish, no question about it, just because of what we've come off of. I would love to Elliott wave this for you, but you know what? There's 1,000 different counts, and every one of them's right now. There's no way to know until we get a push, either up above this area or down below this area, where exactly we're at with it. So there's no point in truly trying to do any kind of an Elliott wave on this thing. Just know we're stuck in a really big range. Looking for your breaks above 11.5, looking for your breaks below 10.7 or 10.6, more importantly. That'll start to give you a better idea of where we're at in the bigger scheme of things, okay? We tried to push up and above the 20-day, and we were well above it until that last hour, bringing it right back down and into these lower levels again, keeping us in limbo. Now, if we grind up for the rest of the week, not a big surprise to me. Why? We're coming into the end of September. That month ends at the end of this week, so that trading will be done. Maybe there's some window dressing going on by mutual funds and that type of stuff. So would they love to maybe see the market up a little bit? You bet. Make their reports look a little bit nicer for everybody coming into the last quarter of October, November, December. Could we scoot down the rest of the week? You betcha we could. Absolutely. I see the scenario there, and that is the bearish scenario of we're on the tipping point of a wave 3 down, and that would be wave 3 of wave 5 to the downside type of a thing. Okay? So it'd be wave 3 of wave 5 of wave 1 for those of you that understand the Elliott wave type stuff. So I am really, really neutral at our location. All I can do, and the best thing I can do for you, is to tell you, don't get wrapped up in what somebody else is necessarily saying, and that includes me. Okay? I'm just going to give it to you as I see it from a trading perspective. A, I don't care if we go up or down. That means nothing to me. B, I just want the market to move. That's all that matters to me. So the best thing you can do for yourself is wait for a break above 11.5 or below 10.7, 10.6, one of those two moves. That's really when you want to start looking to take your trades. Okay, don't get caught in the chop. You're going to find sites that are going to be all bearish, and you're going to find sites that are going to be all bullish. Don't be influenced by what they say one way or the other. The reason is they might have a heavy bearish or a heavy bullish position, and their bias is going to influence the way they view the evidence in front of them. And it's these type of subjective views that can get any and all traders into a lot of trouble. Now, if we go up, those people that were bullish are going to look like geniuses, and the people that were bearish are going to look stupid. Vice versa. The point of the matter is we're stuck in a consolidation. The chart clearly shows it. So don't let your bias get the best of you. Don't allow yourself to say the economy stinks, we have to go down, or we're definitely due for a bounce here, we're going to go up. Don't get caught up in that. Let the chart tell you which direction to go, and that's above here and below there. These two lines are very, very well set, and I think they clearly define where we're at currently within the markets themselves. So best advice to you, let the market be your guide, above here, below there. That'll be the theme for the rest of this video, and it'll make the rest of it very simple to understand. So if you're a Dow trader, above here, below there, that's your trades going into the rest of the week and even into next week, as long as it takes to break one of those two levels. NASDAQ 60-minute, this was very strong. I want to point something out to you. The markets as a whole were up over 1% today, except for the 100 strongest NASDAQ stocks. They didn't make the 1% mark. They're still not showing a lot of strength up here. Now, granted, give them a break. They did not revisit their lows. They have not revisited their lows, so they've got plenty of time to be slow, plenty of time to be a lagger. But it is interesting to note that they did not make or push as hard or as high as a lot of the other indices did. Okay? So keep that in mind as we come into the end of the week as well. If we can get back above this 2290 area, that's a good start on a push upwards for the bulls. That's your long. 2290. Back below 2180, 2150, still my better short position for you, especially 2150 to the short side, as it's way back below all of this stuff here. If you want to try to sneak one in below these moving averages, that's great, but I'd be very cautious, and you'll want to manage it during the course of a day, maybe not even staying in it overnight. You can see how we perfectly came up and retested this 200-day moving average, and we're stuck. We're stuck between these here and this above us. So the bigger picture for the NASDAQ is a break above here and a break below there for the more aggressive type traders in your long and short. NASDAQ weekly, won't worry about. Notice how we are stuck below this stuff here, but really the point is the daily is what you want to be watching going over the next couple days. We'll revisit that weekly later on in the week around Thursday time. SPX coming back to revisit this 200 period moving average right here and above all of this, so it's holding on really well. Big push at the end of the day, made for some decent trading. We didn't catch the top of it or anything in the trading room, but we did pretty well. Made some money off of this before the end of the day was done. Is this the end of a 3 with a 4, then a 5 yet to come? Is this the end of an ABC correction? This is the start of a 3 down? Do you see what I mean? I can go a million different places with Elliott Wave, and each one of them could be right. There's a good bull case, there's a good bear case. Wait for the breaks. On the SPX, go right to the daily. You can see we pushed above, came back below. If we get back above this 20-day tomorrow, that's your opportunity at a long trade, 1185-ish on the cash. But I'd be very, very careful in and around 1190 and 1200 as we approach those levels, or if we approach those levels either tomorrow or into the end of the week. Below us, I like shorts below 1160, 1140, 1120, and 1100. I've been there for a long time with my short positions. None of that has changed for me on the downside. VIX still hanging out in a consolidation. It was down today. Markets were up today, so it is confirming what we're seeing, but overall, this still looks more bullish than it does bearish right now until we get back below 30. If this gets back above 44, 45, more than likely, the markets are in their next move down, and that would be, for me, wave 5 down, and that would be confirmed. Really, confirmation comes for me as the SPX breaks 1100. If price action breaks 1100 in the SPX, then I'm pretty confident at that point that wave 5 down is definitely here. I do even believe today we are in a wave 5 down. I'm only about 55-45 on it though. I'm still just barely bearish till we get that confirmation, which goes back to the beginning of this video. Wait for the break. Same thing in a weekly, straight sideways chop since we entered it back here in August. It's just all sideways action. The markets show it, the VIX shows it, everything's confirming the fact that we are in just nothing more than a large consolidation. The markets are still, as of yet, a little bit on edge about which direction to go yet, and leaving everybody in limbo. Let it break. Let it break. FAS had some breaks here and there, but it all came on gaps. I'm not trading that type of stuff. If we get back above 13, that's your next trade to the long side. I really don't have a short play for you here on FAS. As you can see, this was a beautiful move to the downside, but it all happened on a gap. Can't trade that. Got no suggestions there. So $10 is really, really strong support to the lower side. Above us, $13 long on FAS. That's my best entry for you here. From an FAZ standpoint, below 54.50, that's your next shorting opportunity on the FAZ. That gets you below a lot of these moving averages. You can see them holding really well. I still got to tell you, there's a good chance this is still more bullish than bearish in through here. Maybe it's news, maybe it's reports, maybe it's economic. Who knows what'll trigger this thing? The point is, I really don't have any trades. Maybe below 55 for a short. And above this, I don't even have a long opportunity for you here in FAZ. Sometimes the information's there, sometimes it's not. Right now, it is not. Your best bet is to go ahead and play the indices themselves. Looking for the breaks up above here. Looking for the breaks down below here. That is true on basically all of them except for the NASDAQ, which has just been an absolute monster lately. It's still holding a channel very, very nicely to the upside. But very, very true on the SPX here and here, 1220 and 1120, and the Dow that I showed you. Same type of motion. We're stuck in a huge consolidation and have been for a while. This stinks if you're a longer-term trader. You're probably going nowhere right now with your portfolio. This is fine for a day trader as long as it's moving, which we've seen a little bit here and there, but nothing spectacular. Point is, you're better off to wait for the break. Protect your money. It's the most valuable thing you've got when it comes to playing the market. You blow up your account playing this stupid chop, and I promise you that you will be kicking yourself when the real move happens and you don't have any money to play it. I know that from experience. You get so busy playing the chop, you blow up your account, you have little to no money left to play, and when the real move happens below here or above there, you go, I should have just waited for the break. And that's when you could have made, coulda, woulda, shoulda made, a really good chunk of change on the move. Just wait for it. You're better off using patience. Very, very important if you're going to play the markets. All right, guys, that'll do it for today's video. I'll be back with you again later on in the week. I'll really try hard to get you something on Thursday. We'll try to catch up and see what's happened by then. See ya. Bye.